you doing? It's Wednesday, August 10th. Hey, listen, I'm traveling, but I wanted to try to get in a quick update here. Let's look at a few markets. Hopefully, you guys can hear me all right. And I just took some profits on the long end. So, for those of you that are in the room and on the team, I talked about offering into 172 and a half. I think you guys can see this. So, we got lifted there on some, and then I said you can put some offers in here around 173.15. This is an area, so maybe you offer 173.11, 173.15. Point being that this is resistance, right? So the market's kind of rangy. It is August. The volumes are light. Typically, August was always a pretty miserable month to trade from an institutional perspective. It's just nobody's around. So I kind of expect more of the same, right? A choppy environment, global macro. So you can kind of see the 10-year, or sorry, this is the 30-year. It's doing more or less the same thing, right? We're just kind of ebbing and flowing here. This is a 4-hour chart. So, I like buying within an uptrend. We still have a positive pi cycle here, right? These are the bigger picture, longer term higher lows. And the market held pi again on the 8th, which I highlighted. I think, from the airport, and just another good example of price action, completing a nice cycle and holding the pi line. And then you held the bottom of the cycle here on the 4-hour chart. So I liked buying down here, and now we're at the top of the cycle. So you obviously want to book some profits, and that's what I'm doing here today up at these levels. Still going to keep a core long. I'm long from around this 171.21 area. And let's see if we can test 174 and a half, and then maybe we can make new highs, and then I'll take most, or if not all, of my profit into this 176, 177 area. But that covers treasuries in the 30-year. I'm not short anything in the front end. You could probably sell some fives or some twos up here if you're trading the yield curve, or that's probably more so for some institutional clients, but I won't touch on that in this video. Stocks are more the same. I think if you're trying to short them, you're probably, it's just, it hasn't been easy. It hasn't been profitable. There's probably a decent amount of shorts in the market. I haven't looked at the CFTC positioning. However, it just trades like it's short, I think there's a lot of shorts out there. I mean, I have some puts, but I took most of those off last week. It's just not rolling over. But I have those as a hedge against my longer term play, so I'm not very aggressive about playing the short here at all. Matter of fact, stocks have been bullish over the intermediate term. You can see that the 200's rising, pi is rising. This was a decent downtrend, and we got a break to new lows, but we couldn't close below that 2150 area, which is a level I keep highlighting on a daily basis. And I talked about it in depth during that week, that a closing basis, a daily close is what mattered, and you couldn't get below 2150, so the market stayed in a bullish posture, and it's more of the same today. So if you're short, you probably get some back here at the lower bands around 2165. And I would probably actually buy Dow futures. I like being a little bit long the Dow versus S&Ps, just because the Dow's just been stronger on a big picture basis. It's able to make new highs, whereas the S&P, the Dow's just been leading, to keep it simple, guys. So again, if S&Ps were to test like that 2165 area, that probably puts the Dow down here around 18,385. I would be a buyer there. I let some go on Monday up here that we bought the week before. So it's more of the same there, guys. I'm a buyer on dips on the Dow. Unless we get, this is the 4-hour, unless we get price back below 18,000, I don't think anything's changed there. It's still bullish. I did not do anything in gold. Gold trades a lot like treasuries. I've been talking about that, and I think it's still more of the same there. Again, I bought well earlier in the week. I missed selling. I didn't have anything offering. up here. I'm pretty light long from what I'm used to trading on gold, so I don't know. The right thing was to do was to probably offer some up here, and I did not. But if we get another chance into this 1370 area, I'll book some gains. Um, so you can see pies starting to come up into the same area that I'm long from. But again, it's just a small position. So I'm saving some ammo to buy deeper, right? 13 and a quarter, even all the way back down to 13,000. You want to be a buyer for sure. Gold markets just remain strong, and I think it's going to be that way for the long term. We want to look at a couple things in currencies. I did sell some euros today. I talked about yesterday. We tried to get a little bit of a push, and I wanted to see one more push a little bit higher to make some sales. So it's just kind of choppy, also though, guys. In lines with that same concept that August is choppy, you can kind of see that the currency markets are doing the same. So I'd be a seller if we get above 112 over the intermediate term in the euro. I'm still bearish there long term. If you flip over to the daily, you can see we're just making lower highs. You can see the wave structure here starting to roll over. And when I say that, I'm looking at these bands specifically, right? They're starting to, it just looks like I mean, I like to use the ribbon bands. These are exponential ribbon bands for that reason, is it gives a good visual. So it gives you a wave structure visual, and shows you the trend, right? Helps show the trend. So you do want to keep an eye on where the lower lows are versus the highs, and that really gives you the indication of the real trend. You can also see that this, I highlight the 30-day here. That's descending, right? So you want to look for lower highs at or near a descending 30-day moving average when you're in a downtrend, and that's what's going on. We've been getting lower highs. This was your lower lows here. The market did not make a lower low at the end of July. However, it's still bearish. So I think the euro is just going to be choppy. It's probably really an intermediate term range of 109 to like 113, 114. But I'm a seller if you get to those levels. All right, we booked some profits on the pound versus the yen. This has been a nice downtrend. You can see the wave structure, right? It's a very good visual. Been bearish. This has been a nice swing trade for us. So I'm pretty light now. I've covered most of my short. This is when I started selling back here in July. I liked it when we made new lower lows with the bounce back towards the 200, which was rolling over. And you can see how pi cycle is all rolling over now. So this is a clear downtrend, and we were trading around our position, right? Again, look, here's the 30. I don't know if you can see this blue line, but you got a lower high at or near a descending 30. Lower highs here again. Market went sideways, broke. We covered, resell, cover. Now we're at levels where you make another lower low. Give me like a 131 or lower, and I'm going to cover even more. So it's just a small short. Just a small piece left. All right, and then lastly, and then I got a run dollar yen. I mean, look at this downtrend, guys. There's a lot of support around this 100 area. We violated it intraday. I think that was Brexit. All right, and then every time the market comes back to test this 100 area, it finds support. So if you're short, you're supposed to be mostly covered up. I have a small short. Up from these levels here in July. So I kind of want to see how it reacts around 100. I've talked multiple times that on the higher levels, this 100 area is going to be key. All right. If we don't hold 100, then we can trade the rest of the year probably back into this lows from June of 2013, which is like 94, 95. So, okay, so that's still going to be a big picture area. Call it par or 100, right? You break that, then really over the next 6 to 18 months, I think it's 95, and then I mean even over the next several years, it's probably going to retest 75 if we get monthly closing below 100. So that's yet to be seen, though, right? Well, I'll update that in the preferred portfolio product for the longer term investors, because that is a indication we need on a monthly basis. So we'll update that at the end of the month, as usual. So keep an eye there, guys. If again, I'm traveling, so I'm trying to be in and out on the mobile. If you're new, please visit the site jenkinsrm.com. You can sign up for the free trading room there. We have a couple subscription products. One is the Active Trader. That's for the more active trader who's swing trading or day trading with us, and it doesn't matter if it's forex, futures. We're trading everything from oil to gold, and we have a private channel and a private room for that. That's $150 a month, and I have a long-term investors product that's $50 a month. It's dirt cheap. I do long-term global macro analysis on a 75 to 80 slide deck presentation that goes out monthly, and then you also have access to our long and short ideas and our trade ideas throughout the month. And again, that's for longer term um, investors or traders. So those are our positions that you might have in a 401k or your IRA, or if you're if you're on the institutional side of your portfolio manager, etc. That's where those ideas are, and those are the plays, and that's how I'm playing it long term. And that's called preferred portfolio. So anyway, check it out at the site. Hope you guys have a good rest of your trading week, and I'll be in the room here and there sporadically, and then I'll try to catch you guys in the morning. All right, take care.